Boom, we are live, ladies and gentlemen. Thank you for joining us today. The markets are red and there are blood in the streets. This is always an interesting time when there's so much fear. Even I always get these I was just chatting with Daniel. I'm like, oh my God, that's it. It's over. We're going to $9,000 Bitcoin. And look, this is one of the things we always want to measure in is understanding the risk to reward relationship of any market. So we've been following this nice long-term chart here that we've had drawn up since early March, April, May of 2020. We've been following this bull market cycle since then very closely, and it's been one heck of a ride. Now, one of the problems here is that I believe we are right in the middle of the market, and right in the middle of the market is pretty much as good as over effectively because the risk to reward is almost equal. Now, as time goes on and the risk lowers, the reward becomes higher because your risk. This is one of the sentiments about heads I win, tails I only lose a little. That's really important to understand, right? So if you're losing sleep over watching your portfolio change, it's probably because you're over invested or over leveraged in a particular area. But I'm still actually confident that we're going to get one final kind of jump up. Now, even though, again, I think the risk to reward here is equal. I mean, if you are in profit, this is a good place for, I mean, again, any of these places are good for moving principal capital. Again, I really like suggesting a long-term time horizon and really never selling any assets. But a lot of the times it's easier, especially if it's your first time growing your portfolio, to make sure you have some type of stability within your portfolios that's keeping USDC. We like to lock it up. There's a few different ways to do it. The loan guide that Zootman helped us write was really well put together too. But what I wanted to go over today was just kind of taking a little bit of a closer look. Now, I don't always use these extracurricular pieces here, but we're going to bring up some moving averages. Now, I don't use the moving averages often. There's a few here. This is the three simple moving averages. But actually what today I want to look at is the bear claw. So the bear claw, and let's go to the daily instead of the weekly. Bam. Okay. Yeah. So on the daily, we've seen pivots like this before. Now we've seen a lot of selling, but what's interesting is that the selling is ramped up and it's kind of diminishing as well. So there's a lot of supply that's been coming onto the market. It's being chewed up by all the big buyers out there. I don't have enough to buy all of that Bitcoin, but people like Michael Saylor are putting their hands up for a few $100 million a month. It's a pretty clear indicator that it's being absorbed. Now, there's still big gaps. If we go out to the weekly and we look at this longer term time frame, you can see how much accumulation there was between May of 20. Let's actually zoom in here so you can see. So yes, these nice big green bars down at the bottom of the screen here. Actually, I'll pull up this so it's a little easier to see. This large area of accumulation, and here, these were big areas of buying, and now what we can see is that even these rather small areas of selling actually push the price down significantly, and we haven't seen any large scale buying really come in after we left around $30-something thousand. So we've seen a lot of the accumulation already take place by the big money, and even here we're seeing a pretty equal up to downtrend potential, right? So here's our up stroke in the price, and here is the amount of supply it took to do that. And here we've come down with a significant amount of supply to equal that downside. So actually what we're seeing is still a positive effort to result relationship. We're actually seeing more upside to the same amount of supply than we did downside. That same amount of supply, actually even more, this negative supply sell on the weekly has pushed us down pretty much to where that first new buying bar came in here around October 4th. So we are still seeing a more positive effort versus result relationship. So there's a few things. Again, if we take a look at our moving averages, at least on the daily, we're holding below the 200 and the 350, I think is what we have this set at. And we're well below on the weekly, we're basically in the middle on the weekly for our exponential moving averages. So we could still easily come down to $30,000 before seeing any type of recourse. But again, I don't think that's the case, as much as I'd like to get scared in these moments too, because you see your accounts drop so significantly over the course of a week or two. You're like, oh, I could just take this, and if I'd done that, the markets are designed to do this. It's really what it's trying to do is push you out. So when we go to the fear versus greed crypto index, this is one of the ways we like to measure this. we see quite clearly we've actually been trending in a very, very fear-based area. So currently we're sitting around 20. And if you look at the past of Bitcoin, pretty much any time we're around 10 to 30 is a good area of accumulation. Now we can go lower. Fear can still steep in stronger. So we could see another big jolt down here again as well. But ultimately, almost any time we're in this fear range, it's a good area to accumulate. Even if the price goes down further, one of the hard things about blood in the streets and catching falling knives as kind of a sentiment is that one of the reasons why you start to buy the dip and everyone's like, oh, look, buy the dip, but it keeps going down. This is how you average a price of a good investment throughout time. Some people call it dollar cost averaging. Effectively, it's not dollar cost averaging if you don't know what your dollars are going to be, right? So Michael Saylor is just buying every time that they have extra liquid capital that they don't want to be sitting on in US dollars. So this is generally a great function. Now, effectively, you could ignore all of the market sentiments and do that and come out very successful. Now, there's some great articles we've gone over in the past. One of them's called How to Time the Market. Compares 4 different styles of investing. One person who spends all their time staring at the screen to buy the exact low of those market cycles versus the people that just buy in month over month versus the people that buy in staggered at like just once a year. And they actually all perform really well. It goes to show that just being in the market is ultimately really one of the most important things, and the being in assets that are productive as well. Here with Bitcoin, I think now that it's basically gone public, we have an assurity of the success of Bitcoin, but because we're in this nice fear area, I suspect what we're seeing again is the final LPS. Even though again I want to be scared, like, oh my God, we could, because again, if we take this zoom out stance, we get rid of the bear claw here, and we take a look at what we've been following. There's no real support path before $19,000 to $12,000. There's a big gap between $12,000 to $19,000 that we could come down and fill. That would effectively mean that this bull market would be over. It would be a very short over. I suspect we'd get like 300 to 400 days. So it could look something like this if we dropped. And again, you always know that markets can go both up and down in the intermediary, but that's not really too much of a concern for us. It would probably look something like this, where you had a 200 to 300 day reaccumulation bar with this white that I've drawn on the screen here. Something like this, around 300 days until like the end of December 2022. It would drop back down. It would bounce around between $12,000 and $25,000, $30,000. It would accumulate in this box, and then it would go screaming up higher. This is one of the parts about the midway of the cycle of the market that's not that fun. And we do still see strength in other areas, so we'll just take a quick look at that as well, and then we'll kind of address some of your guys' thoughts and questions. But ultimately, again, we were seeing absorption on the supply here as well on the Bitcoin exchange balance percent on Glassnode's data. We do see that the supply is still being absorbed. Now, it's updated only once every 24 hours. So I don't think we've seen the update. I think it comes out around 2.5 hours from now. But nonetheless, at least as of yesterday, the supply had been consistently absorbed. Now today, we could see a big chunk of supply come into the market. And what we're wanting to witness now is it getting absorbed? And we can actually kind of get a glimpse of that if we do look a little bit closer. So we are seeing a nice increase in the supply signature sell. And at least let's go down to the hour time frame here. We'll get rid of our drawing so it doesn't clutter up. Yeah, there it is. There's this nice big chunk of supply that came onto the market. And you can see that they were testing it too here as well. Let's actually drag this over. I apologize. Every time I change the screen, every time I change the screen size, it resets everything. Okay, there we go. Okay, so we've seen a big peak and a continuous influx of supply into the market the last week. This rising bar wedge here, and we bounced right off of our previous line of support, off that downward channel that we are in just previously. So we've been following a downward channel since we hit our kind of upthrust after, and then followed by distribution. We've been in that distribution consistently. I'm looking at this whole area as an LPS. So it's something kind of like this effectively we're looking at. Now there's a concerning thought here is that, okay, this is the upthrust and then this is the distribution. And we do actually see an increase in the supply signature on the sell side here on the 6 hour. So there's reason again to believe that we could still come down to $20 or $32,000 and potentially down to 19 and 12. Again, the bull market, I don't think it's over. I still think we have one last leg just because there's so much capital on the side that's looking for better prices. And we are seeing absorption here. Like these big supply signature cells are not pushing the price down. Like if we look at the spread here, okay, yeah, this is a great example. Okay, so this circle supply signature versus this price spread. So this is a good way to kind of measure the effort versus result in when you're looking at supply signatures and volume signatures. So we'll compare these two again. I'll bust out the pointer tool so it's a little bit easier. So I'm looking at this price spread and this supply signature. So quite a high supply signature and a fairly large spread. A spread of approximately, I think 5 or 6%. Yeah, okay, 6% spread. So here we actually see a fairly similar supply signature. Again, we're kind of up in this area. It doesn't have to be exact, but just close. If we draw a straight line between these, we're actually getting 1, 2, 3, four of these, 5 of these, 6 back here as well, where we can see the spread. And the spread actually started to increase. Started to increased a lot more on the second one. And then here increased significantly. So we actually see the opposite of that now. We see an increase in selling supply signature, but not in spread. So the spread's already been absorbed back up to 6%. So we see this equal supply signature and a fairly equal spread back to the beginning of this distribution. So to me, it looks like it's ending, that these are kind of the final tests of this area. And again, we are currently hitting the top of this descending channel that we had been in for the last 35 to 40 days from the peak, about 56 days. So this descending channel again, I think you guys can see that here. We've just kind of wicked into the top area, and again we're below the point of control. So again, we are still seeing weakness. It might take a little bit longer. I would like to see, again, we're looking for a close above 58,000 to continue. If it doesn't do that, we're definitely coming lower, and we could come as low as 12 to 16,000. So if you're not braced for that, just be aware that that's like why investing consistently, especially near the middle of a market cycle, is so important. Now, if we look at Ethereum, Ethereum is actually following maybe a little bit of an easier vision of why we are still bullish. So it actually looks a little clearer here in Ethereum why you would still be bullish. But this LPS, this beautiful channel that it's been following, it's filling this gap right now. If we see a close above 42 to 4,300 for Ethereum, we're going to continue the bull market. So Ethereum, I think, is probably going to be our leader here. It's got again, we've been following this really nice reaccumulation after decline structure. This to me was the reaccumulation area of this bull market before we see the final top. To me, Ethereum actually looks to be sharing that story a bit more clearly than Bitcoin. There's still a lot of there's back here, this one. On this chart, our LPS range doesn't look as clearly defined. Probably because you're dealing with just such a significant market, and Bitcoin doesn't have any burning mechanisms aside from people losing it. You know, Ethereum has made some upgrades that effectively make it deflationary, again, aside from people losing their assets, which is technically makes all of these things deflationary. Like anytime you can just lose a one of a kind asset, it's deflationary in nature. And if it's tech, it's also deflationary in nature. So these LPSs in Bitcoin versus Ethereum. In Ethereum, looks much clearer right now that the bull market will continue. I wanted to talk about POLIS really quickly as well. For those of you that have been following the private group, I wanted to make a conjecture here because I definitely made a mistake on POLIS. So I thought we were seeing a nice triple bottom here. It was setting up to be a really nice reaccumulation type range, and we've seen a massive amount of distribution come in the last month. And one of the things that I wanted to cover here, at least as a mistake that I made, or rather a learning lesson, so kind of the same thing, I guess, is that in early stage development of projects, when there's so much supply in the lockup of the market, where there's distributions taking place, early venture capital, people that want to sell to make more investments effectively, trying to use, again, what did we only had like 3 months data on POLIS. That was probably not the greatest idea. Yeah, 80 and 90 days basically of data. So here I made the mistake of assuming that the data would be lengthy enough to provide us a real support layer, and it's clear that that didn't work out. I think we're 15% lower than the previous triple bottoms that we were looking at. So when you're doing your Wyckoff analysis and you're looking at technicals, try to, in the early venture stage of something, you can have these massive distribution drops, and you're not going to be able to see it in the technical levels coming. So just be aware of that. I think it's important. And it helps the other conversation too of why we see such strong structures and assets that have been around for a few more years, and why these technicals become more reliable. So I guess to some degree, charting early stage assets is a very volatile choice. It's not nowhere near as reliable, which brings us to kind of the final close of what I want to look at today before we kind of go over your guys' thoughts and questions, is Avalanche. So Avalanche is down at $98. Well, yeah, let's go over this kind of the full gamut of this story. So we've been big fans of Avalanche down since it was like a few bucks. I'm still a really big fan of Avalanche. This area of accumulation we saw between May to August gave us around a 4 to 5x already. I think we're going to get a little bit more out of that. I feel that we'll probably get, we could even get upwards of $1,000 for Avalanche. It's a very powerful asset. We already know it's in limited supply. Whereas Ethereum, we still don't know how many there are going to be at the end of the day. We already know that Avalanche is locked, set, and in its deflationary phase, where even though they're burning Ethereum, they're still mining it. So it's not totally deflationary. They are producing it through the proof of work system that's still keeping the chain in stake. Now, the proof of stake, I think, goes online soon. I'd have to double check when Ethereum is supposed to take that proof of stake on as flexible work days. But nonetheless, there's a lot of room for downside here in the markets. And this is, again, why for all new investors, we suggest just constant accumulation. Because if you try to buy and sell bottoms or tops, you're going to get uber confused. Whereas if you just bought every month for Avalanche, you're very happy. And what you get is a nice rounded price right around the middle of all the craziness that's taking place. And this is one of the most effective ways to be a great investor, is to remove all the emotion of the price spread and just buy every new moon. This way, what you get is, instead of like, oh, I'm going to buy the bottom here and sell the top here and buy here, which is basically impossible, what you end up doing is you just buy, and you end up with a really nice median price range for all of the asset that you're looking to acquire. It also gives you the time to become more confident about why you would want to make that investment, right? Sometimes you're really confident about an investment today. You come back 6 months from now, you're like, well, that was stupid, right? So what? I think giving yourself the time of adjusting your thesis, especially understanding that we're in the middle of the market, the room for the 100x, the 1000x that we've seen, those already happened. So joining in now looking for those is basically kind of shooting yourself in the foot. Ultimately, although I agree with a lot of the YouTubers that we're going to see 100x, 1000x within these markets, it's probably not at this particular junction of the market. It'll probably come after we have another down in accumulation range. That could be starting now. So just be aware of that, I think, every time you're setting your position out. Now, again, I still think I'm bullish, but I know there's a lot of new investors out there. You know, I know most of our audience in Bear Family is actually quite sophisticated in their investment strategy. We've been playing around for quite some time, but because of the new entrance to the market, I think one of the most things to do is just not make the same mistakes that are really easy to make, which is getting kind of washed around in the emotional muck of price. So I'm stoked about Avalanche, but again, we could very easily come back down to test much lower ranges before we go higher too. So remembering we're already up 4 to 5x from that position to begin with. We hit almost a 10, almost a 10 from the secondary entries. So I would be patient. Again, just a constant accumulation route is going to do you guys so much better. Anyways, we'll do it from our questions. We got a great few videos lined up. We've got some projects we're excited about, and the venture capital space, I think, is still going to keep booming pretty much regardless. There's just too much potential in the technology's use case. I think there's like some $1 billion traded on NFTs today as well. So it's a staggering amount of interest within this sector. Take a look at a few of your guys' thoughts, and then we'll leave it at that for today. Let's see. Should I sell? That's funny. Yeah. So again, when we see new or early investor questions like should I sell, basically you should never be selling. That's effectively the best way to invest, is you should just only increase more of the assets that you want. Selling them is basically a loss, because the market may confirm your thesis 3 years down the road. People get too caught up in thinking they're going to be a trader to make profits, and it's very difficult to do that. It's easy to be an investor who grows wealth through a portfolio, but being a trader to make profits is very difficult. It's very time consuming. You need a decent amount of capital so that you can actually take the losses and keep moving forward. It becomes a very emotionally draining and almost impossible game for the average person to win. So those of you that are asking, like, should I sell? It means you don't know what you're doing. So you need to slow down and start making more consistent research and investment skill sets, instead of just listening to crazy hype buy and sell propaganda. I was going to call that propaganda from now on. I think that's a name for it. It's fucking propaganda. That's what it is. Okay, let's see. Just buy and hold more. I think it's a pretty good way to go. Awesome. Well, I see some good questions in here, but we'll kind of leave it brief and short today. I don't want to read over everything. Thank you all. Oh yeah, by the way, because I'm sure the team's going to have to try to remind me at some point, if you guys haven't yet, go sign up for our private group, because remember, the disease of the early stage investor is over emotional trading and lack of education. One of the best ways to cure that is by joining a group of individuals who have a non-zero sum game mentality, who are all focused on win-wins. We get to collaborate together, and there's no risk for you, because if you go to arcanebear.com/private and you sign up and you're not happy, we'll just give you your money back. So why not sign up? I'm supposed to remember to do that every episode, I think, is what the boss tells me. Anyways, the Tea with the Arcane Bear. We'll leave it at that. We'll see you guys in the next episode. Leave your thoughts, your comments, your questions down below. I appreciate that you made it this far in the video. All you that are feeling emotional, remove the emotion. Look at it from a logical perspective. There's 5 to 10 years of an investment horizon in all of these asset classes. So don't think so day to day, and you'll have a much easier time. And we'll see you. I looked over, I saw you. I'm like, he's going to tell me I didn't